Good morning, everybody. Happy Monday. It's August 12th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We missed out on Thursday. I was traveling, but we're back again, bold and strong and ready to go. Let's talk about the markets here and what we have in store for us over the next couple of days. So obviously, the last time we got together was last Monday. We know the markets were getting poleaxed, getting ripped apart by an unwind in the yen carry trade. And that pretty much cleared up in about a day or two. And we did see a big, huge pop in volatility. The VIX soared up to about 65% on Monday and came tumbling down. We're going to take a look at that chart in just a couple minutes. It's pretty dramatic, pretty amazing, actually. But 65, in context of history here, what does 65 represent? It represents the third highest level of VIX that we've seen in quite ever. In fact, the highest levels we saw were actually ticked a little bit higher in the mid 90s in volatility in 2020, and back in the financial crisis, low 90s, high 80s. 65 here is a really high number, and people use that opportunity to sell volatility. Once volatility gets sold, the flip side of that, get long futures, get long stocks. So that's pretty much been happening for the past 3.5 days. We'll take a look at that chart in just a moment. So volatility still around 20%. We may be coming back down below 20% today or later on in the week as the news is disseminated. What is the news we're talking about? So tomorrow morning, before the market opens, Producer Price Index, PPI, is going to be coming out. Now, remember last month when the June number was delivered in the early part of July, the number was a little bit hot and markets sold off a little bit. Now, Wednesday morning, we get the CPI, Consumer Price Index, and that number was a little bit more favorable last time around in June. So this July number is going to be pretty important, especially with no Fed meeting in August. The next Fed meeting will be coming up in September, but we do have next week's conference in Wyoming, Jackson Hole Conference, which we do believe that Chair Powell will be giving the keynote address. We have a lot of other Fed speakers going to be coming out talking about monetary policy, talking about the economy and unemployment later in the week, possibly a middle of the week as well too. So something to be have a watchful eye on. Now, what's going on this week? Other than the inflation reports that I mentioned, Thursday morning we'll have retail sales for the month of July. That'll be coming out. We did have a couple of good readings on retail sales earlier in the month of July. We did have the big Amazon Prime Days in the middle of July as well too. So I think that this number could be pretty strong and indicate that the consumer is not dead yet. And every time they seem to kill off the consumer, they seem to come back strong. And we saw a lot of the talk and a lot of rumors coming out in May and June saying that, oh, the consumer's tapped out, not spending any money anymore. I think we're going to find out a little bit more on the retail sales, and I think we're going to find out a little bit more about that detail when Home Depot reports Tuesday morning, and then Walmart comes out Thursday morning as well too. So we do have a couple of other names that are interesting in terms of earnings coming out. Applied Materials Thursday night after the close. Alibaba, which has been beaten up for months and months and months, still bad. Stocks are only about $80 right now. I bet the expectations are pretty low for that one, but the economy in China is not great. JD.com is also reporting Thursday morning. Also, we'll hear from John Deere, which has had its own share of troubles as well. So a smaller list of names coming out this week. We're kind of into phase 3 of earnings season right now, and some important names coming out. The large number of bulk of big names have already reported, and back in July and the early part of August. So still some important names are going to be coming out. Again, three reports this week that are from Dow Components, Cisco, Walmart, and Home Depot. So look for those this week. And aside from the earnings and the economic data, we do have, again, we talked about volatility again. The oscillators, breadth oscillators, are still oversold, slightly oversold. The NASDAQ coming in at about -100. The New York Stock Exchange coming in at -20. Now, if we did have a follow through day on Friday. It wasn't anything to be excited about, nothing to write home about. In fact, let's take a look at the internals from that day. Look, we had pretty even ticks on the Nasdaq and pretty even ticks on the NICE. So there was enough selling and buying going on here. Look at the VOLD and the ADD, pretty much flat all day long. Even though the markets did finish higher, put calls starting to come down, and volatility driving the market action right now. So when the volatility has been rising, the market's just been getting pounded. And when the volatility starts coming down, we see the market's been doing fairly well for the bulls. So we'll see if this turns. We did have that big, huge gap up here on Thursday. We haven't filled that gap yet. Let's take a look at the chart here, shall we, and see what the S&P 500 looks like. So over here, so here's the let me bring that out a little bit here for you. Here's the S&P 500. We had this big drop. We do have a couple of gaps here that have been yet to be filled up here. We just filled this one here on Friday, and we have one big one up here near all-time highs. But that's a good 6 to 6.5% away from where we're at right now, right? About 300 points or something like that. So it's going to take a little while to probably get up there. Do this 20-day moving average coming in down and meeting the 50-day moving average right now. So we're about 54.40. I think this market can rally up to about 53.90 to 54.10 before stalling, coming back down. But let's annotate this for a minute here. Let's take a look at that. Let's see if we get back up to that area here. Fix that here. Get up there. Come back in a little bit. Again, volatility is going to be high, and then we come back and we make a higher low in the chart. Come back up here, retest this area. Not very many people are going to believe we're going to get through it. Wall of worry is up, and we got to move up here to that big day last a week ago for Thursday, when we had an enormous drop right before that yen carry trade started. So we get back up here to that 5,500 area, and then we can figure out where it's going to be at. But what would be nice here is to see this higher low in place, if that indeed follows this path. So something to keep your eye on here. We did hit a deep oversold reading on the relative strength here. We hit 30, and usually the markets bounce back off of 30% in the RSI. So we'll see how things go with that. I think trying to get back up into this area is going to be challenging, especially with a lot of things going on, a lot of uncertainty right now with macro issues, geopolitical issues, the election, and so forth. And earnings season will not be coming back around until mid to late October. And then we're talking about 3 more weeks until the election comes around. So it'll be interesting to see how things go. I want to show you a couple of charts here too. Before we wrap it up. What is this? This is the yield curve, 2-year yield curve. This yields versus the 10-year, 2 versus 10, right? And you can see that we cracked through the neutral line. We've been inverted. So when this indicator is below 0, it means the curve is inverted, right? What does that mean? It means the short term, the 2-year the yield is above the 10-year yield, right, by a certain amount. In this case, it's about 11 to 12 bips, right? So when that inverts, that generally means that recessionary possibilities. But we've had this inversion condition for quite some time. While the Fed is starting to raise interest rates, once they raised it past a certain point, we got inverted, and we've just stayed there for a while. Now, what is the meaning of this move from deep inversion to practically no inversion at all? That was the markets trying to get ahead of the Fed on the long end of the curve and saying, hey, Fed, get your act together, get moving, start cutting interest rates. And the market moving ahead. Now, market could be completely wrong. In fact, at this point in time, the market is wrong. If the market is expecting right now 4 rate cuts by the end of the year, the Fed isn't not nearly on board with that. In fact, they've been talking one, maybe two cuts. So we have disconnect over here, right? And the markets have taken it upon themselves to try and drive monetary policy, which we know that shouldn't happen. That doesn't really happen. If you want proof of that, how bad that works, just go back to April, when the expectation from the beginning of the year was that the Fed was going to be cutting 6 to 7 times. That, of course, was absurd. The Fed told you that, and the market had to adjust, and we ended up having a 4 to 6% drop in the markets in April. Remember that. This could happen again. So be careful, be protective. And again, I think that we could move up to this area over here before stalling, come back down a little bit, maybe back down a little bit lower than where we are right now, create a higher low in the chart and get right back up there. And if we get through that 55.55 area, 55.50, there's something to work with there. Volatility. Let's take a look at the VIX one more time before we wrap up. So this big, huge spike in VIX, and we came back down. And then the important day was Thursday and Friday. Thursday came down, and then Friday confirmed that down move. I had to wait, me, not you. I had to wait to see that confirmation down in the VIX. Now, I know you probably say, well, but Bob, you missed out on all this big movement down. Yes, I'm going to miss out on the big movement down. I'm a trend trader. I'm looking for momentum moves. I'm looking for trend moves, not tops or bottoms, right? Who the heck knows if this was going to be the top? It was close, of course. Certainly, coming back down on Tuesday. This was Tuesday, Wednesday, Thursday, Friday. Coming back down on Tuesday was certainly smart. But then Wednesday we had that reversal, right? Back then we're up and then way down by the end of the day. And then Thursday, Friday, we confirmed. So it could be game on from this point forward, right? And that's what I was waiting for. As far as earnings are concerned this week, I had my eye on a couple of names. The ones I mentioned earlier, Home Depot looks pretty good for a potential play over here. I think that their earnings are going to be real sharp tomorrow morning. So I'm going to be looking at adding some of that today. Walmart as well, too. May not be the best numbers, but of course, look what happened last time. They blew it out, and they had a great number, and they kept going in May. Remember, this is right before they did their stock split, and took off to the upside. It has pulled back nicely, about 8% from recent highs. So you like to buy it when the stock is pulled back a little bit, as opposed to making new all-time highs. So when it's not priced in, this stock has a tendency to move nicely. So I'll be watching and looking for plays on Home Depot and Walmart a little bit later on in this week. So I think it's going to be it, everyone. Have a great day. I appreciate all of you spending a little bit of time with me today. Come back on Thursday. We'll be doing it all again with the Daily Bites on Thursday morning on the 15th of August. So if you're in the chat room, I'll see you there in the chat room in a little while. And again, appreciate everyone spending a little bit of time with me, and enjoy a little journey on the way out. Thanks, everyone. See you Thursday. Bye.